Welcome back to Beyond the Skyline, Real Estate and Lifestyle with Bill Brothers, the podcast where we dive into real estate trends, people, and decisions shaping how we live in Miami and beyond. Whether you're watching on YouTube or tuning in on Spotify or Apple Podcasts, thanks for being here. And don't forget to like, subscribe, and drop your questions in the comments. Today, I'm joined by a true expert on the lending side of business, Joel Gonzalez, Executive Vice President of Sales and Marketing at Mor Lending. Joel helped me personally last year with financing the purchase of my home, and I'm excited to have him here to talk about mortgage rates, what buyers and sellers need right now, and where lending might be headed as we look forward to 2026. So Joel, thank you for being on the show.
Bill, thank you for having me. It's done many podcasts together, many different things together.
No, it's great to have you here. But for those that don't know you, can you tell me a little bit about your background and what you do exactly at Mor Lending?
Yeah, exactly. So basically what I say is I help home buyers and real estate professionals find the solution to or build wealth through real estate, right? What does that kind of mean? My primary goal is to help prospective homeowners get financing on their homes in terms of like when they're trying to buy a property, when they're trying to refinance, right? And really just guide them every step of the way. Most people know me as a loan officer. I like to say I'm a loan advisor, right? I'm with the client from before the sale, during the sale, and then therefore after the sale, right? Working with them at every single step so that they just don't lack any questions on the home buying process, specific and the financing.
Yeah. And as I mentioned, you helped me last year with the purchase of my house. And I can say the experience with you and your team was absolutely phenomenal. It was smooth right from the start to the very end, and even afterwards, because in this business, when the transaction's done, you don't hear from people that were helping you along the way. Crazy. And you were there. Obviously, we're friends, but you were there and helping me, guide me, and still answer all the questions that I had too. So what is your approach in guiding clients like myself through this process? Because I know it can be very overwhelming. So how do you kind of take them through that?
Oh my gosh. So I'm a very big believer in a multi-step process when a client comes to me, right? When a client or a real estate professional like yourself refers me over a client, like what's the most important thing to me, right? So I actually have very specific processes and systems in place that have helped me kind of guide clients better. So usually we first start out with a very initial call. That initial call gives me an understanding of, hey, what is your personal fact? What is your cash? What do you have to play with? What's your situation? Like, gives me all the kind of details I need about you, right? From there, my team or I will usually get a loan application going. From the loan application, you'll upload the documents and then we'll work on what's called a pre-approval analysis. From there, this is where it kind of begins, right? Once we get you pre-approved and get you looking, we go through what we call our initial loan consultation process, where we sit you down, we walk you through every step of the loan process. We tell you what the questions you're going to have, right? We ask you about the questions, we introduce who we are, and then we go through a very thorough analysis of the numbers, specifically numbers that not only going to say, hey, this is your highest pre-approved amount, or this is what you can purchase, right? We're going to say, hey, based upon what we see, this is what you should buy to keep you in a monthly payment that's comfortable. You continue saving, and obviously it's not going to make you house rich and cash poor, right? So that's kind of the process of it. And then from there, once we go through the contract process hey, we're going under contract, we're actually buying the property, right? From there, I continue the education going forward. And then obviously after, as you know, there's post-closing consultations, there's closing review checklists, and there's annual yearly wealth equity checkups that I do.
And I think that's super important. You mentioned talking about the numbers, because I think a lot of people, they just don't realize the minutia of all the numbers that are involved with this. So let's say, for example, if you're purchasing a condo, you have your purchase price and HOA, but people don't think about what's hidden behind that. Like you have that, plus you have your insurance that you got to pay for. And there's other closing costs and other fees that you just don't think about. And with the house, you have flood insurance, you have home insurance, and there's a lot of stuff. And
any other details?
I think it's clear, and what you help in this process, and which I've seen you do, is you itemize everything so people know exactly what they're going to pay for and what they feel comfortable paying for in the numbers on a monthly basis.
100%. And I think it's I think a lot of people or loan officers in my position do a disservice to the clients. And why do I say that? you're probably, the person on the other side of you is probably making the biggest purchase of their life. And to us, right, not to say anything big, right, but I did over 80 transactions last year, over $40 million worth of volume. But in that, and something I've struggled with myself is, with those transactions, they start to just become transactions. They start to just become, hey, you're just another person in my pipeline, in my workflow, right? And it wasn't until I got out of that, it wasn't until I got, hey, I need to, this is, every person behind that camera is a story behind, not the camera, I'm in the podcast. I'm in the podcast room here, bro. But every person behind that phone, right? That phone call, every person in that Zoom call, every person there has a story that they're telling. This home is going to be the next stepping point to what their family is going to grow, right? Maybe their kids are going to go through high school in that home, right? And it's very cool to see that. And when you can put a story behind the numbers, you operate differently, right? Instead of just sending them a loan estimate where they're like, hey, here are your numbers, you're pre-approved for this, go ahead and shop. Most buyers don't even know how to look at a loan estimate. They don't even know what it says.
No, yeah.
Yeah. So how can they look at this paper and be like, oh, this makes perfect sense. I'm going to go buy a home with this, when they're not being educated. And then after the fact, like, how can you have just helped a person make a sale and not follow up with them after the fact and make sure they're comfortable in their home, and then every year thereafter, right? Like, tell me any business where somebody's ever sold you something and doesn't follow up with you after the sale. It doesn't exist, only in this business. It's crazy to me.
Yeah.
So that, once I started figuring that out, I think that changed a lot of the way I operated, the way that I gave disclosures out, the way that my processes and systems, and the way that I kind of just operated with my clients.
Yeah, and I see that. And right now, actually, we have a client, and she's process of purchasing her very first condo as well too. And I don't know about you, but this makes me like super excited because this is her first time. And so I'm happy, I'm thrilled to, guide her through the process in every step of the way too. So she's informed, she knows what she's happening, because like you said, this is a big decision. And you've done it with clients, and you're doing it with her right now. And I think that's super important, to be able to guide them, and then they trust you as well too. So I love that. So let's talk about right now what you're seeing in Miami. How are buyers reacting now to the rates, the current mortgage rates, and what's happening with buyers out there? What you're seeing?
Oh man, I mean, buyers are, in my opinion, we're starting to see demand pick back up right now with buyers, right? I'm starting to notice it because rates are dipping. Rates are starting to dip more and more as we keep going, right? I think 2023 we peaked on rates, right? And since then we've kind of been coming down little by little.
So when you say peak and everything, give us some numbers here. So
I think rates, I mean, I'm not gonna, I don't quote me on this, right? But I think rates, got into the 8s, right? Where we're in the 8 percentiles for some lower credit conventional borrowers at some times, right? I don't know the exact peak, but I know for a long time we were hovering in the 7% range, right? The high 7s, right? And recently we've kind of come lower, right? We've kind of just been bringing it down right now. We're quoting people in the 5s, right? We're quoting some people in the high 4s, right? There's some loan products out there that are in the high 4s, right?
Really?
Because of that opportunity, what happens is affordability grows. And I'm going to give you the perfect example here of what this looks like. I had a client come to me, 2 borrowers, they wanted to buy a home with $600,000. Of $600,000 homes, we quoted them a regular 30-year fixed loan, whatever. And we structured it in a way where the rate was a little bit higher, right? But what ended up happening was we have another loan program that gets your rate into the 4s that was really productive for them. But the reason I'm bringing this up is because that rate was in the high 4s. This rate was in the high 5s. The difference of that was one qualified them for $500,000 and one qualified them for $600,000. That's $100,000 of purchasing power between that 1% rate.
Right. Yeah.
So I think that as we see that, I don't think people really understand or grasp the magnitude that rates have on affordability. So as rates continue to come down, you're bringing more affordability to the market. So what am I seeing? Rates are coming down. More buyers are just flooding the market. And I think home prices by effect are going to start to go up again, right? And that's what I'm seeing.
Yeah. And then right now, depending on what asset you're looking at, the areas and everything, we are in a buyer's market in certain parts, like condos, we're in a buyer's market. So there's competition, or there's not competition out there, but people are eager, and with the rates coming down, you're seeing more people get back out there and purchasing.
Right now, it's kind of a weird time where I think people are still, so there's always a lag effect on people, right? People are still, so for the long time, 2020 happened, 2021 happened. Rates were in the 2s and 3s, right?
Yeah.
For a long time, till 2023, 2024, people had this connotation that rates are supposed to be in the 2s and the 3s when they've never been that,
No,
right?
no.
But because that happened, they're still operating off 3 or 4 years ago, right? Now, what's happening? We're in 2026 now. Rates are back down to the high 4s, right? 5s. People are still lagging the effect of coming back into the market. So why do I say this is important? Because you have a full-on buyer's market. People are still kind of thinking it's a seller's market. People don't really know that the rates are coming down that aggressively and what it's doing, right? So right now, in my opinion, is the best window to buy because you're not dealing with as much competition as you're going to deal with in the next couple, 6, 7, maybe to a year from now that you're going to deal with towards the end of this year.
Yeah.
And that's the key.
And I'm so happy you said that too, because there's less competition right now. But what you purchase now and then the rates come down even lower, guess what? More buyers are coming to the market. The prices are coming higher. And who knows what's going to happen to the rates. And then you're going to be like, oh, I should have bought then.
Yeah.
So would you agree that, you know, if you're thinking about buying, you shouldn't just hesitate as long as you can afford it, the numbers work, you should just go for it?
100%. I tell that to everybody all the time. As long as you can make an affordable monthly payment, right? You should be purchasing real estate, right? There's so many added benefits to real estate. I understand there's things that matter. Location matters. Different areas matter, right? But real estate offers so many benefits that a lot of people can't see, specifically tax benefits, right? The tax benefits that you get on real estate are beyond unreal that it gets to a point where if you're self-employed, there's only so many write-offs you can do on your taxes legally, right? There's only so many gray areas you can push, right? But real estate just provides a whole other asset class that is going to allow you to write off those taxes. So I would say if you're a business owner and if you're, let's say, listen, reality is some people like living in Brickell in their apartment and they don't want to leave the city life, right? My cousin, she's an attorney, doesn't want to leave the city life, but she realizes, hey, my income's gotten to a certain level that I need to buy an investment property, right? So I believe that you still need to take that step, whether you're going to buy a primary home or you're going to buy an investment property, you still need to take the step of purchasing real estate.
Yeah, I agree. And you were talking about the rates a little bit, how they were in the 2s and 3s at a certain point, 2020 and 21, and that's more than likely not going to happen again, right?
Probably not. I don't think we'll see that in our lifetime again.
Yeah, but people don't realize where they're at right now. They're still historically low compared to what's happened in the past, right?
Yeah. Average interest rates over, I think that the course of 30, 40 years are in the 7s.
Yeah. So like you said, some people still have that mindset. Oh, just because we're not in the 2s or 3s that rates are high, but they're actually really not that high. You know what I mean?
Not. They're really not. The problem is that home prices are high. But the problem is that they're not coming down.
Yeah.
So you have high home
and they're
prices.
they're not going to come down, especially what's happening in the Miami market too, where everybody wants to be here. We're a global city and people are just flooding the area day in and day out.
I say it all the time. People, it depends on your perception or who you are, where you live. But Miami is becoming the financial hub of the world, right? You just had, I believe the latest news, like Mark Zuckerberg is building a house here in Indian Creek, right? In Florida, right? But Miami is that hub. So I 100% agree with you that Miami is just going to continue to get more and more expensive. I mean, it's kind of competing right now with LA and New York, and those places have not come down in price either, right? Like rents continue to go up, home prices continue to go up. And why? Because at the end of the day, as prices continue to go up, the average median income and incomes continue to go up. That's a direct result of it. Higher incomes, higher purchase prices. And that's what we're going to continue to see.
And I say this every podcast. I think I say this, like I see clients that wish they had purchased like 2, 3, 5, 10 years ago and they didn't, and they regret it. Yeah. And when you have that feeling, you should just jump on it and move on it too, especially in an area and market like Miami, for sure.
100%. It's a hub that's going to continue to grow, and it's high. I mean, listen, right now, what do we have here that's happening this weekend? We have what events do we have?
We have the Coconut Grove Arts Festival. We have the Miami Boat Show, and then we have the Miami Concourse event in the Design District.
So I'm like driving to here. It's noon, and it's jam packed on the highway. Yeah. I'm bumper to bumper traffic, like if it was 9 a.m. You know, so like. Nobody's going anywhere. Yeah. And we're just building more. I see a building go up every single week. Like, you know, there's more inventory, things are being added, but somebody's not going to build here if there's no profit to be made.
Right.
So if they're building means profit is here, means people are here, means their income here, and means it's growing.
Exactly. So where do you see rates headed? We're in 2026 now, the beginning of the year. Where do you, I know it's hard to anticipate, but where do you see the rates headed for at the midpoint of this year or at the end of the year or going into 2027? What do you have an idea where we might be headed?
Yeah, hold on. Let me grab my crystal ball. No, I'm just kidding. I'm just kidding. No, I mean, I love that question. It's a cool question. I mean, look, rates, in my opinion, I think rates are going to go down. Now, when I say go down, I'm not like saying, oh, they're like hypothetically a 6% today. You know, by the end of this year, they're going to be 5%. That's not the way it works, right? Yeah. And when we say rates, like, you know, a lot of you guys have heard me quote rates like of 4s, 5s, 6s, right? Listen, there's multiple different loan programs across multiple different spectrums that could create different interest rates, right? But for the median interest rate, call it a conventional 30-year loan, I believe right now we're in the low 6s, 6.10 if I'm not mistaken there, based on mortgagerates.com, right? We're in that low area. Where do I believe they'll go? I think that it's an interesting question. One thing that you'd want to look out for as a consumer and as a real estate agent is the labor market, right? So what happens is when there's less jobs in the market, incomes go down, not enough people can spend some money, relief has to come through the market through a lowering of rates, right? That's one of the biggest things, and people don't realize that, right? There's a new Fed chair coming now in May. He may push rates down a little bit more by 25 basis points, right, upon because he's appointed by the new administration. The administration has said that they want to keep home prices elevated, but rates lower, right? Okay. So they will already want to do that. So I think that by the end of this year, rates are hovering around 6% right now. I think we maybe see a dip into the high 5s, right? 5.875, right? 5.75 maybe by the end of this year, which is still a decent, substantial move downward, right? But I think that's the direction we're heading in, but it really depends on inflation and the job market. Right. Are there being more jobs added to the market? Are there not? Are people being laid off? What does that look like?
Right. And I think a lot of people don't realize if you think the rates are high or whatever your opinion is, and they happen to go down, a lot of people don't realize you can refinance that. So tell me a little bit more about that.
Absolutely. So I've had a lot of people who have purchased homes at the peak of the market of 2022, 2023, right? And they bought with a high 7% interest rate. Still today, they're in a position of equity, right? In a position of equity where they're able to just refinance, which all refinance means is you're going to pay off your current loan with another bank, but with actualized interest rates, right? So I've seen them get rates in the 7s, right? And then now when rates have come down lower, refinance into the low 5s and put themselves in a good payment, right? Now, what other people don't realize, the refinance strategy is great, but what other people don't realize is there's other strategies to give them a lower interest payment right now as they wait for the market to get better. What is that, right? So you have your temporary 2-1 buy down program, which is basically you get the seller to pay your interest rate buy down for the first 2 or 3 years, which brings your interest rate down by 3, 2, or 1%. So I'll give you the example. Let's say your quoted rate is a 7%. The seller will cover it. So for the first year, your rate is going to be a 4%. In the next 12 months, it's a 5%. In the next 12 months, it's a 6%. So in that time, you can refinance, but the seller has covered all of those costs for that buy down, and you were in a comfortable mortgage payment for that time, right? Okay, that's one. Number 2 is an adjustable rate mortgage. I know they get a really bad name because of 2008, right? But you got to really look more into that. Those adjustable rate mortgages were like rates that started in 1% and then re-amortized, and there was like 5 loans on one property. It was a whole crazy thing. But adjustable rate mortgages are really good programs right now that will give you a really low rate for like 5 years. We're doing a lot of 5-year adjustable rate mortgages right now that are rates. Those are where the rates are in the 4s, helping people just in case, hey, you always have the chance to refinance within those 12 years without any issues whatsoever or any penalties, right? And it's, you can do it as a streamlined refinance where you don't provide any sort of documentation to the bank. You just simply say, hey, I'm ready to refinance, and they streamline you into a brand new loan. That is a cheat code that not a lot of people know about, right? And then the last one is doing different types of loan programs, such as like an interest only loan option, right? Where you're not paying any principal up front. I've seen these usually on like a higher price point homes where because it's saving them a couple $1,000s every single month for the first couple of years, and then they refinance into a better term loan.
Okay. And I think this is a lot of information that people don't know about, but this is like we said at the beginning of the podcast that it's important to keep in touch with your clients and create that relationship because I guarantee you that if they bought a house, let's say it was 7%, if it comes down to 5%, the interest rates, you're going to call them and be like, hey, Mr. Seller or Mr. Buyer, you can refinance and then I can help you with that, correct?
Yeah, it's exactly. So we have what's called annual mortgage reviews or wealth equity meetings or consultations, whatever that looks like. What that means is that I'm following up with all of my closed clients every single year, right? Like once a year at the very minimum. And I'm calling them to see if they have any questions about what's going on in the market. I'm updating them on opportunities that are available to them based upon their rate, right? You know, if there's not really an opportunity, it's pretty much just to say, hey, how you doing? Are you struggling with anything? How are you making your payments? Oh, I feel great. Hey, are you thinking about purchasing a next property in a couple of years? Yeah, I might be. Hey, let's prepare for that now before you even get there, right? So that's very important because it will keep me top of mind of everybody at every single moment, not just for refinance opportunities, but opportunities to optimize your mortgage.
Right, of course. Now, tell me, what are some common mistakes that you see with first-time buyers when it comes to financing?
Oh my gosh.
Do we have enough time?
Yeah. What time is it, man? I mean, you're going to be here for a while. But common mistakes for first-time home buyers are, number one is going to be for self-employed buyers, right?
Okay.
If you're a buyer who is not a W-2'd employee, right? The biggest mistake I see, and in Miami, there's a lot of them, right? Being paid 1099, right? Gig workers, whatever it is, thinking that the taxes that you declare, right, will not have any repercussions on how much you can purchase. So what ends up happening is somebody will come to me and say, hey, I'm a gig worker. I work as a 1099, right? And I make $100,000 a year. And I'm like, really? That's awesome. Let's do it. I look at their tax returns, but they wrote off $100,000. So now you have $0 of net income. So I'm like, oh man, we got to wait 2 years to do that. So I would say the biggest mistake is trying to go to a loan officer or a mortgage professional or a real estate professional like yourself 30 days before you're ready to move, right? You should be asking these questions a year up front, maybe 6 months up front, and just be working the process. Because if you give me 6 months, your chances of purchasing probably go up by 80%. You give me a year, we're probably 99% able to make that happen for you as long as you're willing to take those steps for you.
Yeah.
So I think the biggest mistake is not doing your taxes correctly, not giving yourself ample enough time to get ready. This is not like a car. You don't just, you go to a car dealership and you walk out with the car. This is not like buying a car, right? And number three is not protecting your credit. Man, like pay your credit cards. Like pay your credit cards, pay your liabilities. Like don't rack up a ton of debt that you cannot waste. I understand that sometimes we get in positions of financial hardship, but most of it is really just dumb consumer debt spending. I mean, babe, I'm going to put you in blast here, but my wife, when she was, before she was with me, before she was with me, they gave her credit cards and she didn't have financial education. And so what happens is she went to Navarro and there was perfumes half off and she spent $3,000 on perfumes. Like just because, so just because she could put it on a credit card. Right. So, and that's the things that they don't teach you. Right. So when we got married, I paid off all the credit cards and I said, hey, this is the one credit card you use. We keep our utilization under this amount. Right. And we make sure that we're always at this level. Right. But not a lot of people learn about that because she didn't know. She said, oh, I have this balance. I'll just pay the minimum payments. You end up paying the payments off for 80 years on credit cards, which is an insane thing, right? So I think financial education, credit, taxes, all these things just develop into big mistakes financial buyers make.
And especially in Miami, I feel a lot of people, they just have no idea what they spend on a daily or monthly basis. So if I ask somebody, I say, how much did you spend in coffee last year in the month of April? They should be able to know, maybe not off the top of the head, but they should have a spreadsheet itemizing how much they're spending and their expenses. So you know where you cut back on or see what you could do better. So you know the numbers and a lot of people just don't know. And I think it's important to note that when they're actually in the actual process of purchasing a home that, well, I'll let you explain this, of what they should not do. You said
Mm,
about not
yeah.
putting high limits on your credit card. What are some other steps?
So
Things.
it's funny on my initial loan consultation, I actually have a slide that tells you the 10 commandments of what not to do.
Yeah.
Thou shalt not.
Yeah.
Right? So the biggest things of when you're looking to buy a home, you listen, thou shalt not obviously miss any credit card payment. Just put everything on minimum payment. Like at least at the very bare minimum, put your cards on auto payment
Auto payment.
minimum, just
Yeah.
in case so you don't forget, right?
Yeah.
Don't change your job, right? Don't go from a W-2 to a self-employed worker right away. Like I understand that it may be your time, but if you're going to do that, plan ahead with time. The moment you switch, you put yourself in a position where you're probably not going to buy for the next 2 years, right?
Mm-hmm.
Don't make any large cash deposits, right? At any point in time. Do not finance any new things. Don't go and get furniture. Don't go and, get a new car. That's going to affect your debt to income ratio, right? Don't max out your credit cards. The
Yeah.
moment you start maxing out your credit cards, your credit is going to dip,
Mm-hmm.
right? So these are really big things a lot of people don't take into account and end up doing. And then the other one is don't file your taxes without talking to your loan officer. Like
Mm-hmm.
make sure that he and your accountant are working side by side to make sure if you're self-employed, hey, you're going to do your taxes this year. Maybe you're not ready to buy for another 2 years, but like, hey, if you want to buy, this is how you got to do your taxes. Because what happens is a lot of times for self-employed buyers, you got to do an average of the last 2 years of the tax returns, the net income. So what happens is you do your tax returns really bad 1 year, you go to the next year, and then you got to make up for that last year. So you get hit with a massive tax bill if you really want to buy your home, unless you use some of our non-conventional, non-traditional products, which help you out.
Yeah. And that's why it's important that you're working with a solid team that can help navigate through all this and understand the process.
Yeah.
And I think it's like you hit it on the head earlier. You just can't, sometimes, a lot of times you can do it right away, but it's important to know, hey, I'm going to be buying in the future. Let's start ahead, like 6 months from now, a year from now, just more time ahead so you can better prepare.
And I want to just say something about that specifically. People don't start ahead because they think, right, when they start, they're going to run their credit, they're going to get affected in any way. So in our pre-approval
That is
process,
a huge misconception too.
yeah.
Yes.
In our pre-approval process, we don't require any hard credit checks to be run. We do soft credit checks upfront, which basically is as good as a regular pre-approval, right? And we don't run your credit until you're actually under contract and ready to go.
Yeah.
So it's basically risk-free. I think people have a misconception that there's some sort of risk when asking or when inquiring.
Yeah. And that's something that actually I forget. And I always have to remind clients too, be like, hey, they're going to do this, but you're not going to get a dip on your credit score. It's a soft check. Exactly like you said too.
Yeah.
So it's important to inform these clients and make them aware of everything that is happening and can help them in the long run too. So let's talk a little bit about pre-approval. So at the beginning stage of this, how important is that pre-approval letter?
Oh my gosh, you need it. I don't even have an analogy to describe how I don't want to say the word idiotic, but and I'm not saying that. It's just not intelligent to go out and look for homes without a pre-approval. Number one, you don't know if you can afford the home, right? Number two, if you didn't get the pre-approval, you don't know how much that payment is going to be on that property. So you might be able to afford it, but you might be like, no, absolutely not. I'm not paying that amount of money for the property there. So what have you done? You've wasted your time and you've wasted the agent's time who is helping you, which is you, right? Because you have a great job. You have a hard job, right? You got to go with these clients every single day. I mean, listen, I'm in an office all day and I do a lot of phone calls and I do a lot of things and I run the numbers. I ain't driving.
Yeah.
And I just felt the drive coming here. And I'm like, Lord, thank you for putting me in the path of being a loan officer, right? So imagine you're wasting an expert's time like yourself, driving everywhere, right? When you don't even know if you could actually do this, comes down to time to actually execute, right? And you don't even know if you can. And now you've wasted everybody's time involved who actually cares and wants you to purchase.
Exactly. That's why I find, you can correct me if I'm wrong, but a lot of agents, especially in Miami, they'll go take clients out and then have no idea what they can spend or what their amount is, and they'll just go take them anyway, because they're like, oh, here's here's a easy payday or whatever they're thinking too. But me personally, I will not go anywhere. If someone calls me and say, hey, Bill, I want to see this property. Yeah, sure, I can help you see this property first, but let me know if you're paying cash, great. But if not, then hey, we got to get you pre-approved, because I need to know exactly how much you can spend, and not only how much you can spend, but how much you're comfortable with spending too, because there's two differences as well too.
100%.
So unless you have that pre-approval, then I'm not going to do it because, like you said, you end up wasting your time and everybody's time, and it's not worth it.
It's never fun, man. And I think it happens, I think that happens here in Miami because the real estate market is a very saturated market, right?
Hmm.
I think everybody thinks that becoming a real estate agent or loan officer is easy. It's not. It's a very, very hard job. And I think that the moment somebody says, and I remember it when I started my career, if you're like, hey, I'm thinking about buying a house, I'm like, oh, let me help you out. Like you're a
Yeah,
serious buyer. Like, let me help you. Now I'm like, now I'm a little bit more apprehensive and I'm like, hey, I want to buy a home. It's like, wonderful. Let's go through the process. Let's really make sure that you're serious. No matter what they tell me, hey, I make $300,000 a year. No, I'm solid. I'm like, dude, I just don't believe you, right? Buyers are
yeah,
liars.
yeah. That's
So
right. Yeah, that's the
buyers are
saying.
liars.
Yeah,
I don't believe you. Let's go through the process. And if you don't want to do it, that's perfectly fine. Maybe you're not my client. Maybe you're not the client for us. Maybe you're not the client we want to work with, because at the end of the day, we got to protect and safeguard our time because it's the only thing we can't make more of.
exactly. And I always say this too. It's always important to ask all the questions right from the start, and you do all the hard stuff at the beginning, because if you do that, even though it takes a lot of time, guess what? If you do it properly from the start, it's gonna be easy at not easy, but it's gonna be smoother process towards the finish line
Yeah.
because you're asking the
Yeah.
right questions and you're
Yeah.
doing everything you want to do.
Yeah.
And if you're asking the questions and you're asking for all this information and they don't want to give it to you, guess what that means?
Yeah.
They're not serious. They're not
Yeah.
serious. And that's fine too. That's not fine. If you're not ready, call me. We'll reach out in 6 months or a year, whenever you're ready. And then we'll go from there. But if
Yeah.
they're willing to sit down with you, take the time, whether it's an hour, sometimes maybe even 2 hours, sometimes to go through the process,
Yeah.
then they're serious.
Exactly. It just takes a little bit of time. I get it. It's a little bit of commitment to sit down and get me the stuff. And I know it's annoying. And I tell this to people all the time, like, nothing good in life comes easy. So come
Yeah.
on, just like level with me.
Yeah, exactly. Yeah. So we talked a little bit about this earlier, but tell me, where do you see in 2026 and beyond, where the Miami market is going and how lending is going to play a role in that evolution?
Yeah, a great question. So I think the Miami market is going to continue to boom. I think it's going to continue to boom, and I think you're going to see more and more money of how it's coming now. Listen, right now we're in the digital century, right? Where I can make money from my phone, I can make money online, I can make money from anywhere, right?
Right.
And Miami's a hub. You got great weather, you got beaches, you have vacations, you have shows. Like, who wouldn't want to live here? Let's be real, right?
Yeah.
So I think that you're going to have more people come in. Obviously, we're also in the state of Florida, in the great state of Florida, with no income taxes,
Yeah.
great benefits, right? I mean, Ron DeSantis is talking about eliminating property taxes for people, right?
Yeah.
So we're living in a great state. On top of that, an amazing city. So what happens? I think you're going to still have a lot of people coming in here. I think you're going to have a lot of prices go up, but I think you're going to have a lot more of your higher net worth people, specifically in Brickell, where we're at, right? You're going to have more high net worth people moving in right now. And I think that how do you mold, or what's the lending aspect, is understanding that there are loan options not just for traditional people. So I specialize, and I'm an expert in non-traditional financing, which is what we did for you, right? What we did for you, for real estate agents, people who don't earn normal income, business owners, self-employed people who don't earn normal income through normal ways, right?
Right.
We don't need to use your tax returns. We don't need to use your traditional finances. We can use a mixture of things. We can use just what you deposit in your bank account. We can use a letter prepared from a CPA stating how much you make, right? We can use no income loan programs, right? And I think these tailor to high net worth individuals because they're not trying to do their taxes correctly, and because they're not trying to save as much money, right? So I think by transforming and getting more into that type of lending category and sphere, you're going to start to see a lot of more of those clients come in through the door and actually be able to qualify. Because listen, here's the craziest part. If you're a business owner, you make 100, let's say you deposit, or your revenue is 100 grand a month, right? You make $1.2 million a year, but on your taxes, you have inventory, you have things that you could write off legally by the law,
Right.
and you're only bringing in $200,000 worth of net income. 1.2 to $200,000 is a very different thing, right?
Right.
With 200K, you're probably going to be able to buy a $600 to $800,000 home, right? With 1.2 million, you're going to be able to buy a $2 to $3 to $4 million home. So guess what? I've just eliminated your need to buy a smaller home and give you the opportunity to buy a bigger home. So guess what? More transactions, more opportunity, more buyers, higher demand, higher purchase prices. That's what I think is going to continue happening.
Yeah, interesting. And like you said, a lot of high net worth people are coming here. especially what's happening in California with the 5% taxes that are
Yeah,
retroactive at the beginning of this year. And why we're seeing, you mentioned at the beginning of the pod, Mark Zuckerberg is buying a house here in Indian Creek, and we already
it's
have
crazy.
Jeff Bezos, Larry Page, Sergey Brin, and all these
Yeah.
guys here. So they're already coming, and
Yep.
it's going to continue to flood the Florida market here,
Yeah.
specifically in Miami and Palm Beach. Now, to kind of wrap this up a little bit, Joel. So, if you can give one piece of advice to your younger self, what would it be?
Can I give multiple pieces of
Yeah,
advice?
yeah, if you want, yes.
If I could give one piece of advice to my younger self, it would have been to follow Jesus Christ much earlier on,
Yeah.
and let him lead my life. That would be the first and foremost piece. I'm a very big man of faith, and faith has driven the way that I run my business, from my compassion
Hmm.
to people. I was a very selfish individual beforehand. I was always very driven. I always had a drive to be successful,
Hmm.
but that drive was never directed. That drive was very selfish. That ambition was for me to grow with the money, with the cars, with all these guys posting, I want the Lambos, I want this, I want that. That was my ambition.
Hmm.
Everything has changed, but it's changed for the better. I've gotten friends in better areas that are leading better lives. I've got a wife who I love with all of my heart. I got a baby on the way that I'm excited to bring into this world and develop and grow. And my drive to produce has not diminished. In fact, it's grown more, but it's grown to build a company that does right by people. It's grown to have business partners that are right with people. It's grown to me being more selective, and it's grown to me having more purpose in life. I used to read these books, Napoleon Hill, Think and Grow Rich is a great book, right?
Yeah.
But it's always like, find your why. I'm like, all right, well, my why are my parents, right? But not really. Like, I love my parents with all my heart, but my parents are set up. Like, my parents are good. And I'm like, okay, like, what can I really do for them, right? And it was never that driving push until I found Christ. And I'm like, man, my why is to be the best disciple of Christ that I could possibly be on this earth, serve my wife faithfully and serve everybody around me faithfully, which is why if I don't build the best of my ability what God is calling me to build, there is no way I'm doing a disservice to him.
Hmm.
And so he's shown me so much grace, so much mercy, that I have to be able to really give that back to him and live my life here to the fullest, to his truth.
I love that. And when you have a purpose in life and you have a mission, it makes everything easier because you have something to drive for and look forward to and have a reason to wake up and give it your
Yeah.
all every single day. And
Every
I
day.
love that.
Every single day,
I love
man.
that. Now, to kind of wrap this up, so where can our audience, where can they find you on Instagram? What's your website? Tell us how they can contact you.
Yeah, absolutely. So you guys can all find me on Instagram, Joel Gonzalez Official. I'm mostly active there, but you can also find me on my YouTube page, Joel Gons. No, I'm sorry, Mortgage Loan Joe on that one. Facebook, Joel Gons 235, and TikTok as well. Joel Gonzalez Official there as well.
Yeah, awesome. And then we'll have all those in the description below, so you can contact Joel and he
Yeah.
can help you with all your lending needs in
Yeah.
Miami and pretty much anywhere in the U.S., right?
Yeah. I'm actually gonna, if it's okay with you, I'll drop I'll send you my link tree. You could put it there. In my link tree, you can get access to a pre-approval guide. You can get access to my home buyers newsletter that I send out as well. And for any agents out there watching this as well, you want what I've got going on here. You can also subscribe to the Realtor newsletter. I'm more than happy to consult and speak with anybody, but Bill's honor being here. I appreciate your friendship, not only from just a professional level, but from a real friend level as well.
Oh, I appreciate that, and I'm thrilled to have you here. This was a great conversation, and I appreciate you explaining the lending side of the business because a lot of people just don't know.
Yeah.
And I think you gave them a lot of valuable wisdom and nuggets to take away too, and help them feel more confident about their purchasing decisions. So
I appreciate
thank you for that. And to everybody watching, listening, thank you for tuning in to Beyond the Skyline. And if you're a buyer or seller or trying to navigate this market, I hope this gave you some clarity. And remember, as always, in Miami, it's not just about where you live, it's about how you live. Until next time, I'm Bill Brothers, and I'll see you beyond the skyline.